Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment opportunities in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about an investment opportunity that I personally think looks a lot like buying Amazon back in 1997. Now, wouldn't we all want to do that? So the name of the company is Opendoor, ticker OPEN. Longtime watchers know that I've been super bullish on Opendoor ever since the company announced its SPAC merger back in late 2020. In a nutshell, I think the housing market is the last great retail vertical that has yet to be digitized, and that Opendoor is pioneering the digitization era in the enormous housing market. By 2030, I fully expect most homes to be bought and sold online, and for Opendoor to be the unrivaled leader in this market. That's why I like to call Opendoor the future Amazon of houses in the making. But while Wall Street initially agreed with this thesis and sent Opendoor stock up from $10 to $40, investors have since gone bearish, and the stock has trended back to $18. This is a great time to buy. Our research and channel checks suggest that Opendoor's business momentum has not slowed down at all, and in fact is only accelerating at the current moment. So recent weakness in the stock simply won't last. It will reverse course soon, and when it does, the subsequent rally will be very, very, very big. Plus, long-term, the upside here is just so big. We think this is a 10x to 20x winner over the next decade. So this is a name that you want to put on your radar today, buy the dip, and hold for the long haul. Here's a deeper look. Now, there are two big things driving Opendoor stock lower right now. First, the market has turned its back on early-stage pre-profit tech companies amid a rise in Treasury yields and a rebound in growth in other sectors of the economy like energy, financials, and retail. Opendoor is an early-stage pre-profit tech company. It simply found itself on the losing side of this shift. Nothing the company can do about that. Now, second, the housing market has remained red hot in terms of pricing thanks to limited supply. Home prices nationally were up 11.2% in January, the biggest jump in nearly 15 years, mostly because there's a lot more demand in the housing market right now than supply. And that's not great for Opendoor, right? Because in a hot housing market, Opendoor's home selling services are less compelling to home sellers, since those home sellers have all the leverage with buyers and can often fetch far above market value for their homes. But we would ignore this recent weakness in Opendoor stock and simply buy the dip, mostly because the headwinds weighing on Opendoor are ephemeral, and because the underlying growth trends remain vigorous. On the rising yields front, Treasury yields have stopped surging, as it appears the best of the economic data is now in the rearview mirror. As we head into May, June, July, the year-over-year comps will get tougher, and the growth rates that we're seeing in the economic data right now will come down. This will put pressure on Treasury yields. So I'd write off the taper tantrum fears. The worst of that taper tantrum is over. Yields may head higher over the next several months, but not at a worrisome pace. Meanwhile, despite current housing market dynamics, the data actually shows that Opendoor's growth trajectory is very quickly accelerating in 2021. Of note, our checks show that Opendoor's web and app usage has been very strong. According to App Annie, Opendoor's app ranking in the US App Store among lifestyle apps has steadily increased all year long, from an average ranking of below 400 in January to an average ranking of around 300 over the past few weeks. Now, according to SimilarWeb, web traffic to Opendoor.com has also been on a healthy uptrend throughout 2021. January traffic rose 48% year over year. February up 65%. March up 57%. Total Q1 up 57%. So big growth numbers there. Now, similar web data also shows soaring Opendoor app download volumes and healthily rising usage throughout January, February, March, and April. Also of note, the housing market may be turning a corner to help out Opendoor. New home construction jumped 19% in March, while new home permits rose 30% year over year. As the economy gradually reopens, home builders will get back to work at a more robust pace, and the market will be flooded with new supply over the next few quarters and years. This will help balance the supply-demand dynamics in the housing market, which will be a boost to Opendoor's business. Long-term, Opendoor is the future Amazon of houses. We've been over this bull thesis several times, so I don't want to sound like a broken record. But the big picture here is that the home selling process today is bogged down by multiple profit-taking middlemen, mostly real estate agents, who add unnecessary cost and time into the process. Opendoor automates those folks out and takes their cut and applies it to other costs in the process. The result is that buying and selling through Opendoor is easier, faster, and most importantly, cheaper. To break that down a bit further, basically, real estate agents are taking a 5.5% commission on average and pocketing that money as their income, right? People need income, they need it to live. Now, what Opendoor does, though, is they undercut that 5.5% commission with a 5% fee and then apply 4 points of that 5% fee to other costs in the process that normally would fall on the seller, like staging costs, selling costs, and overlap fees. And Opendoor is able to do this cost effectively because, one, Opendoor doesn't need a salary to live and they can rely on scale, 1% everywhere. That's a lot of money. But also because they have a really smart team of engineers. A lot of former Uber, Square, and Google people, software and pricing engineers, have jumped ship to work at Opendoor over the past few years. And that talented team is creating the world's most robust trend forecasting algorithms to accurately price homes in minutes in a way that allows the company to still make money. It's genius. It's pure genius. This is the future of home buying and selling. Opendoor is at the center of it. It's a great long-term investment opportunity. Our modeling suggests this is a $100 billion company in the making, as we predict that by 2030, more than 1 out of every 10 homes in the US will be bought and or sold through Opendoor. And that's why we think near-term weakness in Opendoor stock is a long-term opportunity. We expect the tide to turn very soon, probably when the company reports Q1 earnings, because we think the data here says those numbers are going to be very good. Simply too good for the market to ignore. The stock will rebound, and that will be the beginning of a multi-year uptrend in this name to $100, $200 plus prices. Well, that's all we have for this edition of Investor Play's Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, smash the like button, or you can follow me on Twitter. Still having some trouble with the account, trying to contact Twitter and get a handle on that, but I should be back up and running there pretty soon. In any event, thanks for watching, cheers, and happy investing to all.